So, in that premise, Annie, thank you for letting me interrupt you. So
Oh,
go
no
ahead
problem.
now.
Let's get on to the subject of what's an idiot. I'm not looking at my wife. An idiot is a person who does the same thing over and over again and expects something to change. And of course, it doesn't. And none of us are idiots here. So we know that if you want to make changes in your future, changes, especially in a financial way, there are things we need to do differently now so that in 10 or 20 or 30 years, whatever your goal is, you'll have a better, stronger financial basis for your future. And, you know, some of the younger people who aren't here now, but hopefully will be watching the video, will realize that if they don't change now, if they don't do something differently now, the finances won't be there in their future, especially in the years of retirement when people would like to draw on those and sit back, have the life of luxury in Las Vegas, like our friends are doing, our spiritual friends, enjoying all that Vegas has to offer. But anyway, so the question gets down to, why are you here? How much time, how much effort are you willing to put into the subject of learning to either trade or invest in the financial markets? And there's basically three things to consider. There's investing, there's swing trading, and there's day trading. Investing is like going out and buying a good stock, whether it's Apple, whether it's Visa, Microsoft, or something like that, buying a good stock and perhaps putting it away and let it grow through years and years of appreciation. When the correction comes, you don't sell it, you just hold on to it and let it go down and hope it will come up. And of course, most of these good companies, outstanding companies, will come back. So that's investing. The other thing is swing trading. That is buying stocks or exchange traded funds, which are baskets of stock, and being in those investments or trades for a few days to maybe a few weeks. What we're looking at here through Investors Business Daily, the Can Slim method, which is in the book that we're talking about, is a swing trading strategy. In other words, we're in it for a few days, but it does take some efforts on your part to learn it, and then some efforts to management. In other words, periodically looking at certain things to make sure it's time to be in the market or out of the market. That's what we're learning, swing trading. Now there's a third area which I like to do, and I know Jessica likes to do, and Luz also does from time to time, and that's day trading, where you might be in the same stock for less than a day. You might buy it in the morning or buy it in the afternoon and sell it before market close to make a quick $300, $500, or whatever. But now frequently when you day trade, you have to be at the computer because your stocks can go up and down quite fast. So you need to have time, especially either at the open, which is 6:30 California time, or at the close, which closes at, most of them close at 1 o'clock California time, 1 p.m. So if you don't have time to at least be there either in the morning or at the close, you'll have a difficult time day trading. So most people can, make time available sometime during the trading day to swing trade. You could either do it first thing in the morning. A lot of people that work, they do it at their lunch break, or they do it at market close. So the question that each of you, not only you who are here today, but those that will be looking at this video during the coming days, you have to decide how much time, how much effort do you want to put into it. With investing, the effort is minimal. And if you pick the right stock over a period of months, if not years, you can reap some really good money with minimal effort. Swing trading is probably the most lucrative because you grab a quick 10, 20, 25% of profit. It could happen in a few days or a week or two. You take that money with your profits and you go find another one that meets the can slim or the IBD
Criteria.
strategy. Yeah, that we're doing. And of course, day trading, there are several strategies. It very hard on your emotions, your stress level, because when I started day trading in 1999, 2000, each trade would have about $100,000 at risk. So needless to say, it can get your blood pressure up, especially when it starts going down and you say, oh my gosh, I just lost 1,000. Oh my, 2,000. So, so it can be very stressful, but there's money there. And I would not necessarily encourage it unless you have a lot of experience and a lot of time available to it, to do it.
And that's where the educated risk in investing comes in, because what we're trying to do as we lay out a foundation, black and white, we're laying out a foundation that would help us through the management of the risk itself. And I really love IBD because it's a the very first chapter already, they keep on uh, um, saying it again, over and over again. Keep the profit, keep the profit, keep the profit. And how do you keep the profit? They have profit. They have actually mentioned three criteria just for that. So that's also part of
So what I would encourage you to do is to think about this between now and the next meeting and decide for yourselves. Are you interested in investing, which is a good method to use, where you don't have to spend so much time and effort studying. We can guide you to where to go, what to check out, to pick out some of the best rated stocks by the different brokerages, and maybe be involved once a month, once every 3 months. Or if you prefer what we're learning here in swing trade, and try to make your 20 or 25% profit in a week or two and really rake in the profits, we're happy to continue with that. Or three, the day trading, which is another subject in itself. Now, we're not covering options at this time. We're not covering Forex. We're not covering futures, there are another 27 ways to make money in the various markets. We're focusing in on the IBD can slim strategy.
And favorably, what they usually do with this one is on the stocks and the ETFs.
Yes.
So all of the action steps that they have at the end of the chapter is actually for stocks. The stocks that have met the criteria of the can slim, and we're going to go through that, three of that later on, and they have actually done their run. Yeah.